So I'll give a quick overview of the company and then get into my favorite part, the numbers. I will start off, this has so far been a really successful year for us at Great Lakes. I'll get into a lot more detail on some of these items. We did start off the year with delivery of a new hopper dredge to Galveston Island. Galveston Island is up and working now and doing very, very well. We also just ended this most recent quarter with a record backlog for the company of just over $1.2 billion, really setting us up for the foreseeable future to have continued strong results. And we continue to make progress on our new initiative, U.S. offshore wind. And again, I'll get into a lot more detail on that as well. Let me start with who Great Lakes is. We are the leading provider of dredging services in the United States. We've been doing this for a very long time. The company was established in 1890. Our largest customer is the Army Corps of Engineers, so we do mostly government work, and that's infrastructure work, but we also work for local and state governments and private clients as well. And as I mentioned, we are starting to enter into the offshore wind space in the U.S., which we think could really be a growth catalyst for the company. But let me start on the dredging side. So dredging is infrastructure. We protect our coastlines. We rebuild and deepen coastlines. There's really three major kind of projects that we work on. The first is called capital. That is the deepening and widening of ports. That is our bread and butter. Those are complex projects. We like those kind of projects, and because of the complexities, they do come with higher margins. The next type of projects that we do is called coastal protection. That's creating beaches, but also rebuilding beaches. We've seen the storms that we've had over the last couple of years up and down the East Coast. We have to go now and rebuild those beaches up. We've seen a lot of coastal protection work so far this year due to the recent storms that we've had. The last major category is maintenance. There's natural sediment that occurs once we do the work, the deepening and widening, and it requires to come in on a fairly regular basis to clean that up. Those are highly competitive. In general, the margins are lower. It's not something we target. We typically go after capital and coastal protection, but it is work that needs to be done, and it is good work that we can do in between some of these larger projects. Historically, we've had a pretty even mix of revenue between the three, about a third, a third, a third. You can see on the bottom, foreign. Right now, we have all of our vessels working in the U.S. The U.S. market is very robust, but we have in the past and can, if need to, work these dredges overseas as well. Let me talk a little about our fleet. We have the largest and the most diverse fleet in the industry. There are really three different kind of dredges, and we have a number in all three categories. The first one is a hopper dredge. A hopper is a ship, so these are self-moving vessels. We have 5 of those right now and 1 under construction. We have the Ellis Island, which is the largest dredge in the United States. These are obviously mobile. Since they are ships, they can operate in very tough waters and get in and out. They're just very, very efficient tools, and it really has been our priority in our new build program. The next class of vessels is a mechanical dredge. We have 4 of those. These are clamshells or backhoes sitting on a barge. They're very fit for purpose. They can get into tight spaces, and they can do rock and just very, very fit for purpose, specialized tools that we have 4 of. Last category is hydraulic dredges, or you may have heard the term cutter dredges. Basically have teeth, and they can really get in and dig tough soil and rocks and get it up, and then use boosters to pump the material out of that. We have 7. The reason having this diverse fleet is an advantage, it gives us a lot of flexibility when we're working on a project. We don't just put one dredge on a project. We'll move dredges in and out, again, to find the most efficient way to do it. So it is not unusual for us to use all 3 type of classes on a very large project. As I mentioned, we are the largest in the United States, not only by vessel count, but also by market share. We have historically had a mid-30% market share. This is the prior 3-year average, and our market share is the same as the next 3 competitors combined. So a position we've had for a very, very long time in the United States. I mentioned our largest customers, the Army Corps of Engineers, which has been a really good thing for us. We have seen year after year record budgets for the Army Corps of Engineers. That's the work that we are bidding on. 2024 was no exception. It was a new record budget, and we saw this bid market explode in 2024. I'll talk about that a little more later. In addition, I mentioned the storms that we have seen that have hit the East Coast over the last couple of years. There was an additional $1.5 billion of funds in 2023 earmarked for that, and we're starting to see that work come out as well. And early indications for the 2025 budget is expected to be a new record budget again. Infrastructure really is one of the few things we can say is truly bipartisan. We do not see any less emphasis on infrastructure, whether Republicans in the White House, the Senate, and the House, or Democrat, and we expect that to continue. One thing worth mentioning here, every 2 years there is something called WRDA. It's the Water Resource Development Act. That is where Congress earmarks the funds that they are going to study for future projects. The WRDA 2022, they have started studying the next deepening of the New York Ship Channel. That is going to be a huge project, estimated to be about $6 billion. We expect that to start in the latter part of this decade, in the second half, and that'll go well into the next decade. So this deepening cycle that we have seen in the United States looks like it will continue with the really big one in New York. And then I mentioned we also work for private clients. Last year, there were 2 very large LNG deepening facility projects that went out for bid, and Great Lakes won both of those. So the Rio Grande LNG and Port Arthur LNG, we started dredging on both of those projects in the third quarter of 2024. That'll go well into next year, and one of the projects will go into 2026. Very large projects. The Rio Grande LNG project is the largest project that Great Lakes has ever undertaken. I mentioned our record backlog. We entered this year with, at the time, a record backlog of just over $1 billion. And I thought it was going to be very difficult to maintain that balance, that backlog. And fortunately, I was proven wrong. We just exited this quarter with $1.2 billion. In addition, we have another $465 million of jobs that we are low bidder on, and we're just waiting for the formal award, and that includes some options as well. If you look at the top right, that is the breakout of the $1.2 billion of backlog that we have. I mentioned the capital project. That's what we aim for. Those are the higher margin projects. And we have not only this record backlog, but 3/4 of that set up in these capital projects. So it is really teed up for us now to have a really successful end to this year, and the next couple of years look really bright. Down at the bottom are just some of the major awards that have happened this year. The red bars are the ones that we have been successful on, which is about half of them on this page. And then if you look to the right, so far in 2024, we're maintaining our mid 30% win rate on this pie. This is a much bigger pie than we have seen in the past. So far in the first 9 months of this year, we have seen $2.5 billion of jobs come out, which is the highest that I've seen in this 9-month period, maybe ever. So really strong bid market, and we're winning our fair share of those. We are in the late innings now of the largest new build program that Great Lakes has ever undertaken. I mentioned earlier this year we did take delivery of a new hopper dredge to Galveston Island. We are building a sister to the Galveston Island named the Amelia Island. She'll be delivered in the third quarter of next year. I said we already have best-in-class hopper fleet. The Amelia Island will just make that even more so. We're also investing in emissions improvements. We've done that on the dredge and on some of our support equipment. We've also built some support equipment. In particular, I want to mention the 2 multi-cats that we built last year. There's an efficiency gain on these multi-cats, but these were really done as a safety play. It makes our pipeline operations much safer to do with these multi-cats. And I'm happy to announce last month at the Workboat Conference in New Orleans, our multi-cats were awarded Vessel of the Year. So they're doing really well in keeping our operations safe. And then lastly, in our new build program, We are building the first and only Jones Act compliant subsea rock installation vessel. This is to service the offshore wind space, and it's named the Acadia. So let me talk a little about offshore wind. So about 4 or 5 years ago, we were looking for what is the next growth play for Great Lakes. We're the leader on the dredging side of the business. What else can we do to really get this growth to go? We did a lot of surveying and studying and research, and quickly decided that we wanted to be a first mover in the U.S. offshore wind space. It's obviously a very established market in Europe right now, and U.S. about 15 years behind, and we thought we wanted to be part of that. So we are building the first and only Jones Act compliant subsea rock installation vessel. This will lay the scour protection around monopiles and the cables that connect the monopiles. We do have 2 contracts right now, one for Equinor on their Empire Wind 1 contract, and one with Ørsted on their Sunrise Wind project. So we'll start when we take delivery of the vessel, scheduled for the end of next year. We'll start on Empire Wind and then go on to Sunrise Wind. We also just announced post-quarter end that we have signed a vessel reservation agreement. This is with a 3rd wind developer in the United States. And now we are negotiating a contract, and we're hoping to get that finalized in the next quarter or 2. And that gives us more visibility for backlog 28 and 29. And we are progressing a 4th vessel reservation agreement right now with a different wind developer for work in the United States. So we are starting to make progress being the first mover in this industry. And so we're really excited about the prospects of offshore wind for Great Lakes. The map on the right is just a number of projects on the Northeast that are either permitted or getting ready to be permitted. We are tendering on most, if not all, of these projects. There's a pipeline of work until 2031. This year has also been a very good year for offshore wind. We did see 2 projects on the East Coast complete installation. And the South Fork Wind is actually producing power right now on the East Coast. We also have seen a number of permits get issued during the year, and we've also seen a number of offtake agreements between the states and the wind developers to sell the power. And we have a goal right now to get to 54 gigawatts by 2035. And Bloomberg is predicting that the U.S. will be the 2nd largest offshore wind market by 2040. So we're very committed to the U.S. market. We are also, though, in parallel to bidding work in the U.S., we are bidding the Acadia in Europe. There was an undersupply of these type of vessels in Europe. So we have a presence now in Europe, and we're going to bid both here and in Europe, and we're very comfortable we'll get full utilization on this vessel. One thing that's interesting too, even though we are building this to service the offshore wind space, this is a scour protection vessel. It lays rock over anything that needs rock. So we are bidding on rock over pipeline, oil and gas pipeline. We are also bidding on rock over telecommunication cable. So there are other, besides offshore wind, other utilizations for the Acadia. A couple of significant milestones on the construction of the Acadia. First, last year, we were honored to have President Biden join us in the Philly shipyard for the steel cutting ceremony of the Acadia. Earlier this year, the keel was laid, and it's starting to resemble a ship right now. So again, very excited about the prospects of the Acadia for Great Lakes. Just a quick note on this. We kind of have an interesting mix on the management team. We have half of this team grew up at Great Lakes, legacy Great Lake folks. And then over the last 5 or 6 years, with the move to the headquarters in Houston, we've brought in some oil and gas talent, and that's going to help. There's a lot of similarities in the offshore wind space. So have this interesting mix of old school Great Lakes and then bringing in some new ideas from the oil and gas industry. So here's a snapshot of the last 5 years. I have talked in the past about the bogey that we had as an industry in 2022. There was a lot of post-COVID hangover, and despite at the time a record budget for the Army Corps, a number of the projects that were expected to come out didn't. We were very adamant post-2022 that this was an anomaly, and all the work that was supposed to get done in 22 would get done, in addition to all the work that would come out in 23 and 24, and that's exactly how it's played out. So 2023 turned out to be a $2.7 billion bid market, and again, we won our fair share, and that work now is starting to translate into the margins that we're seeing in 2024. So year to date so far, we have $560 million of revenue and $96 million of EBITDA. If you look at the trailing 12 months, so that's the bar, the red bar furthest to the right, we have EBIT of $137 million. If that was a standalone calendar year, that would be the second highest year that we've ever seen in the history of Great Lakes. So this thing has come back exactly how we thought it would come back. And because of the mix of work that we have, mostly driven by the capital projects, margins are really starting to accelerate. So we're seeing an 18.5% EBITDA margin over the trailing 12 months, again, mostly driven by project execution and a large number of capital projects. I mentioned we're winding down our new build program, and once we take delivery of the Acadia and the Amelia Island, we will be done with that. It was a $500 million new build program. From the end of the third quarter until completion of both the vessels, we have about $125 million left on the new build program. Once we take delivery of the Amelia Island, we have no plans in the immediate future to build any other dredges. Our dredging fleet is in really good shape. And then a quick note on liquidity. We are in really good shape. We ended the quarter with over $300 million of liquidity. We have no debt maturities until 2029. Our average weighted interest rate is under 7%, and we had an undrawn revolver at the end of the quarter that doesn't mature until the middle of 2027. So in really good shape to get this CapEx program done, get all the new shiny toys, and then really start building cash. I do want to talk about the most recent quarter. It is the fourth consecutive quarter that the current quarter exceeded the prior year's quarter. $190 million of revenue, again, a lot of capital work, and then we have the Galveston Island, which is contributing. And then again, you see the margins. We're getting gross margins now, 19%. That is extremely strong. And then again, a very solid EBITDA quarter at $27 million. And again, we expect this trend just to continue with the backlog that we have right now. And then speaking of backlog, just to show you how historical this backlog we have right now, on typical year, we average just over $600 million of total backlog. As I said, we're sitting at 1.2 now, plus this other $460-ish million that we expect to get awarded over the next quarter or two. We have a pipeline right now of over $1.6 billion. But as I mentioned, not all backlog is created equal. The thing that I think really sets us up is this red bar here, $900 million of capital backlog. That's 150% of what our normal average backlog is in total. So I'm not going to go through anything. Thank you. I'm not going to go through anything in the appendix. We have this posted on our website. Go through it. So I guess just in summary, this last 18 months really has played out as we expected. We knew this work wasn't going anywhere, and it all came out in one time, and we're really, really busy. And with a pipeline of $1.6 billion, we expect the next couple of years to be extremely strong. So with that, I can open up for questions. Please.
You were talking about 2 LNG plants that you're working on?
Yep.
Isn't the dredging goes a lot faster than putting the plants in? So do you have to go back in?
Yeah, no, so we are dredging those facilities, so they need to get those facilities deeper in order to bring the ships in and out. So it's just a dredging project like any other large deepening project for us. Just our client now is an LNG facility as opposed to the government.
any CapEx spend accelerating those backlogs at all, or
I'm sorry?
do you see any additional CapEx expenditures accelerating the backlog at all, or is it just purely based on?
Yeah, so like I said, we need to get through this new build program. So we got another 125 million to finish that. And then we may do some, nominal upgrades to some of the existing fleet, but no, we expect CapEx to get down to, our normal maintenance CapEx is typically in the 25 to $30 million range. Once we get through this new build program, that will be our maintenance CapEx. And again, we may just do some, nominal upgrades that we will do well within cash flow.
I guess taking a step back a little bit, you highlighted the, record high pipeline, and also your capital projects have been quite strong.
Yep.
Taking a step back, like what is driving that strength in the capital projects? And then, can you handle it basically?
Yeah.
This pipeline has never been so strong. What are you doing to ensure that you can handle it?
Yeah, so I mentioned 2022, and you saw the results. There was a big pullback. But as I mentioned, those projects didn't go anywhere. So now what happened was the 22 projects started going in 23, along with the 23, and then the 24. So then you just had this huge amount of work in a short period of time. So if you look at the 3-year period, the bid market probably played out as expected. It just really got compressed into a 2-year period. And the U.S. is in a deepening cycle right now. That's what's driving the capital. It's a big jigsaw puzzle as we figure out when we're bidding work how we're going to get it done. There's no concern about getting these projects done. One of the things we really like about these capital projects is typically, contractually, you have a lot more time to complete them than you actually need to complete them. So it does give us a lot of flexibility to move in and out. Now, can we continue to keep adding to backlog? We are full almost completely on a number of dredges going out until 2026. So yeah, we will have to be very methodical now on which jobs, over the next quarter, 2 or 3 that we decide to bid on.
Can you speak a little bit about your capital allocation plans once that growth CapEx dies down?
Yeah, so I said that'll take us until the end of next year. CapEx will be done. We have all the new vessels. Earlier this year, we did do a $100 million second lien term loan. Not by coincidence, the call protection, we can start calling those in October of next year.
With more than 6,000 small and micro cap companies listed, if you're looking for the next Apple, then Channel Check truly is your tree. It's an investor community where you can access independent Wall Street research, advanced market data, balanced news, corporate videos, and podcasts. You can even register to attend in-person Meet the Management Series lunches, and to be part of the preeminent annual Small and Microcap Investor Conference, NobleCon. And here's the best news. Since Channel Check is sponsored by the featured companies, premium membership requires no investment. It's absolutely free. So check it out. Log in today. Find out why Channel Check is North America's leading source of research on the companies that just may change the world.